All right, I think we're on now. Okay.
I think so too.
Good. Great. G'day, guys. How you going? Nathaniel and Aidan here from Flow Power, and thank you very much for joining us. Aidan, how are you?
Yeah, good, Nathaniel. Pretty unusual to be talking to a colleague across video conf
Yeah,
every day, but I suppose that's been life for the last few weeks. So yeah, we're all
I'm getting
settling into
very
it.
used to this. Yeah.
Yeah, how's things
Yeah.
at your end? You're at home, couple of kids, probably more a madder house than I've got. You're surviving
Yeah,
okay?
they're just wrapping up their lunchtime now, so they're getting in the midst of learning from home, or schooling from home. So my wife's kind of adjusting to that process as well. But yeah, interesting times, definitely.
Could have some graduates, put them to work.
Yeah, that's not a bad idea actually. Thanks for everyone for joining us. This is a new initiative that we've just recently kicked off, but very timely in that 2020 has been probably a big year for Flow Power, and we've been really excited about really jumping into 2020 with so many things happening on the market. And one of our goals this year was really just to get out there and start sharing what we are seeing and some of the insights and the trends that are happening, not only on the market side, but also on the physical side with demand response and renewables and energy management, all being impacted with what's happening across the energy space. And obviously now with recent events in COVID, that's pretty much being disrupted again. And so it's been quite timely in that we've had to adapt and shift. And it's really, I guess this live stream is really just a way where we can continue our goals to get out there and get out into the market and just share some of these insights with you. And so we're really pleased and really excited that you've kind of joined us. Yeah, I do have to ask, and I'm probably speaking for both Aidan and I, this is a new experience. And so we haven't necessarily gone live online before to what looks like to be climbing over a couple of hundred people. So so the fact that that's the sign-up's been quite popular suggests that people are looking for information out there. And so yeah, we're really pleased that you guys are yeah, we're really pleased that this is relevant and you guys have taken the time to sign on. Aidan, tell me a little bit about, I guess, what you've been up to recently and you know, I guess how timely this has been for you.
Yeah, so my role here at Flow Power is really around sort of heading up our wholesale, our transfer pricing and some of the analytics functions. And so it's certainly the shift to home and homework has gone, I would say, relatively smoothly. We've seen obviously the market continues to operate, both the physical and the financial markets, which I'm sure plenty of the people online will be interested to hear about. And what we've been seeing is plenty of interest from consumers, perhaps where they're you know, relatively healthy and have a better certainty in terms of their operations, looking to contract and looking for sort of retail pricing. And so that typically comes through my team. So it's been a fairly busy time.
Yeah, it would be. It will be. So I guess just to take that into context, guys, we will evolve the content and the structure of how we facilitate these sessions. As Aidan mentioned, he heads up the wholesale market and pricing activities within Flow Power. I head up the engineering team here at Flow Power, looking at a lot of the engineering projects with renewables, demand response, energy management technologies, etc. And so between the two of us, what we're hoping to do is give you a balance of what's happening in both these areas. But very much so, we want to broaden this space up to provide you with greater expertise from the wider Flow Power group. And so in the next slide, we've prepared just a quick snapshot of some of the personalities that we'd like to bring on board over the coming weeks and give you a bit of a broader coverage of what's happening across the market. And so you see Aidan and my name there. People like Alex Lehman, who heads up our demand response team, looking at the procedures there, what's happening with demand response programs such as RERT, wholesale demand response mechanisms, and even just wholesale spot responsive procedures. These are all core elements of our business, and so Alex will participate at some point throughout the coming weeks.
Yeah, particularly interesting off the back of summer and the recent REP program, etc. So Alex should be able to share some really good stuff.
Yeah, Sarah is one of our financial analysts here at Flow Power, and she's very much involved with a lot of the front of meter renewable energy projects that are currently taking place and understanding how they interact with the market, LGCs, and being able to maybe look at some of the forecasting and the modelling of how these renewable energy farms will operate on the market. Byron and Tricia from our Sydney office head up the Sydney teams, Queensland and New South Wales teams from an engineering and sales perspective. So again, similar to Aidan and I, we can probably, Byron and Tricia can cover a lot of what's happening both at the engineering level as well as what's happening at the more retail product level. And how the consumers are typically responding to that. So, and then of course, Matthew van der Linden, who's our chief executive, has always got a lot to share with what's happening across the market and what Flow Power are doing in response to that. So, so hopefully through this combination and through this format, we can continue to provide you with up-to-date information about what's happening in the market. And by all means, we do encourage you to get involved and send us your questions and let us know what you want to know more about. And we can bring in the right, excuse me, we can bring in the right expertise to address some of those questions. And particularly, we'll look at how we can structure some of these topics. So we're not necessarily covering everything or just one topic in one session, but we can potentially spread this out over a number of weeks. So, so yes. I'll just show you the next slide as well, and just give me a second when I just have a drink of water here. Okay, so so just from an illustration perspective, we thought we'd just show this because this is possibly a format of how we can start to represent some of these topics over the coming weeks. And we're calling this something like energy quadrants or market quadrants, or the labeling of this will refine over time. But ultimately, what we're trying to show here is really the structure of how we could refer to some of this information. And so what we have across the top level there are financial topics and things that relate to the market, and in which Aidan can cover a lot more about in quite amount of detail, and we'll do that a bit later on today as well. And then the lower side, we've got the physical side, which may include generators, infrastructure, storage systems, networks, and etc. But then on the vertical separation, on the left, we have front of meter assets or front of meter activities. And these are things that typically aren't necessarily within your control, but impact the way you consume as well as the way you pay for your energy. And so, by example, in the finance area, that may cover what's happening on the ASX markets, how your network tariffs are structured, some government initiatives. It might also include demand response programs such as RERTs and other things. And a lot of those finance elements in front of meter also relate down to what's happening at that physical level with generators, network activities, renewables. Obviously, the amount of renewables coming on the grid is having a significant impact on the way we pay and use energy. But then if we look at the behind the meter side, these are obviously areas that you would, as a consumer, typically have more control and more options around how you go about navigating this space. And from a finance perspective, that might include your retail contracts, how you structure those, how often you go out to market. It might include how you go about securing options and swaps and caps. And yeah, just in terms of how you go about structuring your retail contracts. On the physical side, this could include a lot of the on-site activities being, your energy management activities, demand response activities, renewables, etc. So these are typically the 4 quadrants that we'll be referring to over the course of this live streaming. And hopefully through this will give you some context as to where things sit, but also how you can navigate through this space to obviously reduce your costs or reduce your energy use and so forth.
I think what stands out to me, Nathaniel, is really sort of left to right, sort of old world order, new world order, in terms of where energy retailers are shifting and moving more from traditional vertically integrated retailer or gentailer across to sort of energy management companies, I'd say. And here we are, Flow Power, sort of at the forefront of that, sort of tackling it from all sides.
Yeah, you're right, because there is, we are seeing a merging of those two of the front of the meter and behind the meter activities almost coming together, where an individual customer may be operating in all those different elements, just for the fact that they can now install infrastructure that anyway, we'll get on to that in a minute.
Yeah, we'll have plenty of time to cover it all.
That's right. So actually, so to kick this off, COVID has obviously been a big focus for a lot of the industry and a lot of the market, and we'll definitely get stuck into that. We might actually just cross over to Aidan, maybe just to give a big snapshot of what's happening in his world and how he sees COVID kind of impacting some of the markets at the moment.
Yeah, thanks, Nathaniel. So I think probably for the balance of sort of today's sessions, we did want to spend a bit of time, somewhat selfishly, given it's my sort of area of the retailer focused on the physical and the financial markets. We see that's probably where most of the questions are coming from in the sign-up phase. Lots of questions around the fall in prices, both in the spot market and in the financial or the contracting market. And so try to give you a bit of a flavour of what's been happening there and what the drivers have been, as well as, I suppose, how COVID has potentially accelerated some of those or sort of enhanced some of those trends. So I suppose starting with the physical market, the spot market, I suppose for many customers on the line or many people on the line today, you might not have a direct exposure to the spot market or sort of be directly facing it at the moment, but certainly your retailers would. And many of the customers here at Flow Power, if not all of them, do have some element of exposure to the physical or the spot market, either through a load shape exposure or price efficiency factor exposure, or to the absolute price through our sort of wholesale based customers. And so what you see up on screen here is monthly average spot prices since the start of 2019, progressing through time. And I think what's clear to see is that the trend has been to the downside for quite a while. We did have a lift in price in January, particularly in New South Wales and Victoria, and some hotter weather and some challenges when the Hayward interconnector went down, which was probably a bigger issue through Victoria than South Australia from a commodity price perspective. But in the sort of outside of those really extreme short-term periods, you can clearly see that the trend has been softening in price, and what we've seen over the last couple of months, underlying prices sort of sitting in most regions in that $40 to $50 a megawatt hour range. So a lot of the softness here is coming pre-COVID, pre some of the restrictions, pre the shutdowns, and so there are some underlying or structural changes that are happening there. Clearly, we're seeing record levels of renewable energy generation in the system, both in front of the meter at a utility scale and behind the meter, with rooftop solar being quite prevalent, and that's obviously influencing daytime spot prices as well, seen in a reduction in demand. Through this time, you've also probably had cheaper fuel prices, noticeably so in the gas market, and that's probably been accelerated and will potentially be a factor over the next couple of months as a result of the oil price softness and the sort of global economic slowdown that is associated with COVID as well. So these factors are clearly have been played out through the back end of 2019 and into the start of this year, perhaps masked a little bit by some January volatility, but by and large, spot has been trending lower for those reasons. And arguably as well, the last piece of the puzzle is that prices have been high for a long time, and when we switch across to the financial market, you'll see the strength that we've previously come from in contract prices. And what that does is necessitate or sort of encourage generators to be hedging to higher levels. And so as a result, they may be more highly hedged than previously. And so these lower prices that we're starting to see here, they start to be a little bit indifferent to it in the short term at least, while they're still contracted at the previously high prices.
So Aidan, have generators been impacted at all with COVID at this stage, and is that cascading back down to the customer?
Yeah, good question. So I suppose the physical market, let's look at it from the supply and demand picture. On the supply side, no major disruption at this point in time. Obviously, we've seen generators and vertically integrated retailers invoke their pandemic plans. We've read about how they've separated key operational staff, different shifts, these sorts of things to try and ensure that if someone got infected on a particular team, it wouldn't knock out their ability to operate a generator, or for their trading team to manage the dispatch and those sorts of things. And that's largely seems to have happened seamlessly at this stage from what we're hearing. And so supply has remained very relatively healthy. As I said, there's probably an element there of good contracting levels already still in play from the elevated contract market that we've come out of through 2019. And so as a result, there's probably this indifference there, at least in the short term. And so it will take some time before generators start to look at these lower spot prices, either the $40 to $50 range, or even in the last few days, we have seen spot prices sort of in the $20 to $30 on the back of that Easter holiday. The market's been quite soft the last couple of days. So it will take a bit of time for generators to start to reposition themselves as a result of these low prices. But you'd expect to see some of the higher cost forms of generators starting to reposition sooner. And obviously gas gen's looking to target the higher price times of the day, despite the fact that their fuel costs have come down significantly from circa $8 to $10 a gigajoule down to $4 to $5, and that will really impact their short-run marginal cost and bring them much closer to the current market. But I suppose then probably some of the higher cost black coal generators, particularly in New South Wales, then starting to shift and reduced output. But in terms of major supply issues, we haven't seen anything at this stage.
Okay. So generator seems to be quite consistent at the moment. Demand looks to be dropping. I guess that's a from a flow power customer perspective, that may be spot exposed. There might be some good news there for the near-term future. I suppose though, if we were to take the wider market that's exposed to forward or the contract market, for example, what would the trend look like for them, and how would they typically navigate through this space, being on a fixed retail price?
Yeah, so certainly the prices that you flashed up here is the financial year 21 contract, and probably just before we jump in there too deeply, probably demand, we want to spend a little bit more time there, simply because obviously that's probably where the evidence of the COVID impact and the slowdown has really started to materialise. We probably haven't seen the full picture yet, but we did start to see, obviously, with those lockdowns and restrictions impacting businesses through March, more so in the back end of March. I think the major restrictions on pubs, clubs, gyms, retail outlets, that sort of came in the second last or the last week of March. And so we already saw reports coming out of Morgan Stanley and others that demand across the NEM in the month of March was down 7%, March over March, March 20 versus March 19. But probably April and into May is where we're going to really start to see the bigger impacts of these sustained lockdown measures on businesses and other areas of the economy. Medium term, obviously, if you do start to see insolvency risk, default risk, these sorts of things that really start to hurt some industries more so than others, particularly the large C&I consumer base, that could accelerate the demand moving lower. But at this stage, the data is suggesting, I think Reputex put out an article or some analysis this morning or overnight, suggesting that they think that on average demand across the NEM will fall in April and May, probably about 20% from normal or sort of previous expected levels, and so that is probably what we're seeing play out. And I certainly look forward to continuing this conversation over the next couple of sessions to once we see a bit more of the data and see how much demand's come off. But 20% is obviously a significant chunk, and so that's obviously going to weigh on prices, particularly if it persists. Offsetting that slightly, we obviously do have winter, perhaps a little bit more heating load coming in to both the gas and electricity markets, depending what state you're in, over the next couple of months. But at the moment, it's pretty mild. This sort of autumn period feels pretty mild, certainly here in Melbourne, and I think that's the case across other parts of the eastern coast. And so you're really seeing that those factors could all combine to circa, use the phrase, sort of a bit of a perfect storm to really keep prices quite depressed here in both the spot market, and then that will flow through to the forward market.
Yeah. So I guess we we can see that that COVID has obviously influenced the demand at this stage, but we don't potentially know by how much, given that we're only been in this phase for what, 3 or so weeks. I guess, would
Exactly right.
you, without speculation, would you anticipate that as the economy starts to improve and things go back to normal, would you expect the market to respond to that and potentially go back to normal levels?
Yeah, I suppose what is normal at the moment? I
Yeah.
mean, we were starting to get used to sort of $80 to $100 a megawatt hour prices, both on the spot and the forwards. But I
Mm-hmm.
think that that's probably fuel prices are much lower. There's much more renewables in the system. So I think that in the short to medium term, sort of through the balance of this year and into next, those prices seem low likelihood. For sure,
Yep.
during really tight, if we have a very hot summer, you know, the risk of blackouts, which was so present heading into last summer and a feature of the 19 summer, that still exists. So certainly don't downplay the risk of extreme volatility for periods when the system is, you know, demand's really high and it's stressed. But by and large, underlying prices look to be fairly comfortable, sort of somewhere in that $50 a megawatt hour range, plus or minus, you know, $5 to
Yeah.
$10 at this stage. And that, you know, in terms of gas prices being low, there's this lagged relationship to the oil market, and so overnight again, the US oil price benchmark dipped below $20 again, $20 a barrel. So all of that to weigh on price, and I would expect to keep fuel prices fairly low through the next few months, and that should keep spot in this range for now. And probably
Cool.
that's a really good segue, because you can actually see what the market's expecting in the forward market. So this on the following slide, we have the financial year 21 contract prices, and obviously the first quarter of that is Q3 2020. And so yeah, it'd be pretty hard to find someone who thinks that the COVID situation won't be at least impacting Q3 to some extent. Maybe it's still isolated, or maybe it's sort of quarantined to the airline industry and international travel. But I think you will, I think most people tend to think at this stage that there is still going to be implications for local and domestic businesses, and with those restrictions in place in Q3. And so those contracts across most regions sort of trading in the high 40s, low $50 a megawatt hour. So that's the market expectation through the balance of winter or that Q3 period. But clearly, what you can see here from these financial year 21 contracts is a massive dump in price starting sort of last October, November, and that times well really with the declining spot prices. So the market's starting to believe that this is probably here to stay for a while, and you can see the fin year 21 contract. But if we looked at the subsequent years as well, you're looking at prices sort of in the high 4s, low 5 cents a kilowatt hour, or sort of $45 to $55 a megawatt hour, depending on which specific region you're looking at, and that's out across the next few years. So a lot of the risk premium has been sold out as the market sees that these near-term spot prices may prevail out across the next couple of years at this stage.
Wow. Okay. So I guess if you're a customer that's currently on the market and looking to recontract potentially in the next 3 to 9 months, what could they take away from this in terms of how can they go about facilitating that?
Yeah, prices are good.
Yeah.
Prices are good across all regions. In South Australia and Victoria, prices have come off about 40% from their peaks, as you can see, in New South Wales and Queensland. Queensland obviously trading below the other regions, with seeing softer spot prices there already last year. The shift in price has been slightly less, but still 30%, so still significant improvement. So there are really good opportunities for customers to be thinking about recontracting at much better rates than what they were thinking they might be exposed to towards the back end of last year. And I suppose if from a customer's perspective, I suppose it really comes down to what sort of certainty you have in your business in the current restricted environment. So I suppose our recommendation, and it's convenient for a retailer to be telling you to think long term, to be thinking about locking in prices, because it's obviously favourable to our business, but quite clearly you can see the scale of those declines in the market, and the opportunities that are there. So I'd say avoid the temptation to look short term. And yes, there is still plenty of uncertainty to play out here in the near term. If you have a very bearish view, if you're concerned that, global recession, complete slowdown that's really going to last a couple of years, that would be a potential risk to the downside. But by and large, it looks like this is probably pretty fair value and pretty good buying, given where we've come from, and probably closer to the bottom than the top. And so if you've got some degree of confidence in your business or your industry would be encouraging you to think longer term.
Yeah, it's interesting to navigate through with all these things taking place. Maybe if we can, Aidan, touch on what's happening in the environmental markets and how that's kind of being impacted, if at all, through COVID.
Yeah, absolutely. And I suppose it's not going to surprise you for me to answer that by say it's uncertain, like
Yep.
everything at the moment. I suppose you sit on the engineering side, and so you probably have a better feel than I do in terms of some of the challenges in the project development space. You want to talk about that, and then I'll jump into the cert prices?
Yeah, sure. So yes, you are spot on in that there has been an impact on the particularly on the solar farm space where we're currently quite active. Not just for us, but across the board, there has been some delays in getting panels and materials into the country, and that's caused potentially some of these projects to get pushed out, which is then having an ongoing effect as to the operational dates for when these projects were to be completed, and then which is having an ongoing effect with how customers then recontract out to go back out in the market. So we are having to navigate this space a little bit. I haven't heard of major projects at this stage, although there probably needs to be a little bit more research in this, but I haven't heard of any major projects at this stage being cancelled completely. So that is a positive sign for the time being. But yes, we are hearing delays in a lot of materials being, the restrictions to materials entering the country, but also resources being available to actually finish these projects, given the restriction of people being mobile and being able to go to these project sites. So yeah, these are things that we're having to manage. On the smaller renewable maybe rooftop solar side, that's also taken a little bit of a hit as well, with companies not necessarily having the same level of access to be able to go out and install these systems on businesses and on the residential side as well. So again, the industry as a whole is taking a slight hit in that. And then obviously with all these systems being delayed for being commissioned, I guess this is having an impact on the certificate market.
Yeah, absolutely. And I suppose if we circle back to the large scale market, you would expect the lack of supply, project delays, or at least that uncertainty to drive prices higher. It's actually the reverse. We've seen LGC prices come off, and you've got to remember that it's a pretty well supplied market. It is a market in which retailers can defer liability or roll it forward. And so that is ultimately going to influence the supply and demand. And so we did see LGC prices fall away back below $30 a cert. They've tracked up a little bit in the last couple of days, but I wouldn't expect them to break out of this range, because any project slowdowns will should ultimately feed into a deferred strategy. And furthermore, retailers' natural demand is lower based on it's obviously a fixed surrender percentage in the scheme, and retailers are going to have consumed less, so their need to buy certificates will be slightly lower, and that will obviously play out through the weeks, months ahead as we start to understand that impact on demand. In the small scale market, that's one that has risen. We've seen prices get extremely close to the clearinghouse price at $40 a cert. Prices eased a little bit in the last day, so it looks like we probably won't get there for the Q1 surrender, but I think for the Q2 surrender coming over the next few months, we're likely to have a shortfall, because as you say, the system installations are going to fall right off a cliff edge. That's what we haven't yet seen it in the data, but we're hearing it as sort of solar installation pipelines reportedly start to slow and dry up, and so that's going to all factor in. Energy efficiency markets as well have seen some interesting moves, and there's challenges obviously in terms of installing some of this equipment on site for customers or for consumers, and auditing that work, and so that will play out in price as well, and we'll sort of know more over the weeks and months ahead. And so there's probably topics that we'll look to cover back on when we know a bit more, and as prices sort of move around a bit.
Absolutely. So guys, we're reaching 2:30 now, and so we'll close it off soon. Before we just jump on to some questions, but I guess this is just some of the content that we'd like to share with you around what's happening in the markets and how you can take this information to apply to your own scenarios. But beyond this, we do at some point want to also introduce what's happening in the renewable space, in the energy management space, in the demand response space, because all these things do play a factor. And so over the coming weeks. If these are the things that you'd want to know more about, please by all means let us know. I just want to double check to make sure that we're still on, because we have just lost our screen.
Hopefully the audio is still going.
Yeah.
But I think there's an extension of that is we had a question around the ancillary services market. So we'll certainly bring Alex Lehman in. He's that's in his wheelhouse as he manages the demand response aspect. And certainly a very hot topic. Sort of spoken a lot about commodity price today and the spot market, but recognising that whilst, for example, in South Australia, the spot price might have not been so crazy in Q1, certainly the ancillary services market has seen some very aggressive prices and some high prices. So, so that's certainly an area we look to talk a bit more about and unpack and sort of highlight potential future risks moving forward.
Absolutely, absolutely. Okay, so I'm just going to go through some of the questions here just to see if, okay, let's try to move 2 to 3. Okay, I think we're looking good. Most of them just relate to the content that we already covered, Aidan. So, okay, so on that note, guys, if there are questions that you have beyond what we've covered today, we have set up an email address on the spot at flowpower.com.au. Please send through anything that we haven't covered or that you want to hear more about in the future to that email address, and we will certainly put that into the agenda at one point or another. But until then, thanks very much for your time, and thanks very much for joining us in this first live stream. And yeah, hopefully we'll see you again.
Okay, stay safe out there, everyone. Cheers.